Good evening, everyone. Once again, welcome to this session. This is Rashmi from greytHR and today's moderator of the session. First of all, I would like to welcome once again all of you to our 42nd Ask the Expert webinar, Parichay. And as you know, the topic for today is salary tax exemption under different sections. Well, before I dive into the topic and further discussions, let's do a little housekeeping on how the session goes. So the flow of the session remains the same. That is basically the session is divided into two parts, wherein in the first part, we will be having a good discussion with our today's expert CA Ruchika Bhagat, which will then be followed by audience Q&A. Well, I can say audience Q&A is where time is all yours, participants. That's when you can put across all your questions related to our topic, and the discussion will soon be having, and get your questions answered. All right. And also currently the session is being recorded. So if happens to miss out on any part of our today's session, not to worry at all. You will be receiving the recorded session of the same soon after we are done with this session. All right. So I think on this note, let's start this session. So to tell you more about our topic, it's all about income tax for salaried people, right? So income tax for salaried people is calculated based on various tax slabs. So tax planning must be started with the start of a new fiscal year to have ample time to make better investment decisions. After various deductions, income tax for salaried people is calculated based on multiple tax slabs. So exemptions offered on income tax as per the tax rules are the ways in which one can try to save up more on their earnings more, right? So these provisions are in place to allow people to cultivate a habit of saving while aiding the financial institutions of India and also making a better financial future for themselves. So what are the salary tax exemptions under different sections then? So in the next 1 hour, we are going to discuss this in length with the expert CA Ruchika Bhagat, Managing Director, Brooks Consulting Private Limited, a payroll and HR consultant firm, and understand salary tax exemptions under different sections. Well, to tell you more about Ms. Ruchika, as I already mentioned, she's the MD of Brooks Consulting Private Limited, a payroll and HR consultant firm. She's graduated from the University of Delhi in 1996, and she has become a member of Institute of Chartered Accountants of India, ICAI, in 1998. She is a strategic advisor in setting up businesses in India for foreign companies and taking care of its compliances. She specializes in business advisory, tax, regulatory, and risk advisory. She is a business professional with more than 24 years of experience helping other businesses grow and be more profitable. She has a strong and genuine passion for business growth and sustainability and has a vast knowledge of working with Indian companies as well as many other foreign companies like from UK, USA, Italy, China, Korea, USA, UK, Japan, Israel, etc. So, ma'am, we are honored to have you here in the session. Once again, welcome to this session.
Thank you, Rashmi. Thanks a lot. First of all, thank you for this nice introduction. And undoubtedly, thanks to you and greytHR for giving me this opportunity here.
It's our pleasure, ma'am. All right. So, ma'am, we'll start off with our first round of the session. That is, let's have a little bit of understanding on what is all about this. Right. So, to start with, can you please help us understand what are the tax slabs for salaried employees under the old and new tax regime?
Financial year 22-23, we have two tax regimes. One is old, another is new. When you talk about old tax regime, to begin with, let's talk about old tax regime. There we have three categories, like one is general category, then we have senior citizen, and then we have super senior citizens. senior citizens who lie between 60 to 80 years of age, then super senior citizens who have age above 80 years. So income tax slabs have been categorized into these three categories. When we talk about a general category, that is all who are below the age of 60 years, then in that case, the slab starts from 2,50,000. That is still 2,50,000. You don't have to pay anything. Then for senior citizens, it starts from 3 lakh. That is still 3 lakh. Income is entirely exempt. And then for super senior citizens, it is rupees 5 lakh. Above this tax slab, we have education cess and surcharge, which ranges as per the income you have. Then this is all about old tax slab. Coming to the new tax regime, there we have like different slabs, but again, income up to 2,50,000 is again exempt. The only difference between the new tax regime and old tax regime is, in case of new tax regime, we cannot claim any deduction like LTC, house rent allowance, all other allowances under section 10. Similarly, we cannot also claim the standard deduction here. Interest on loan taken for purchase of house property under section 54, and most importantly, section 80 deductions. No deductions will be available as per the new regime. But I also want to add here one thing more, which is very important. As we all know, yesterday only our new budget has been declared for financial year 23-24. There they have given the advantage to the salary class employee. Earlier, what used to happen, till 5 lakh, you don't have to pay anything. Though our slab starts from 2,50,000, but practically till 5 lakh, you don't have to pay anything. But now this 5 lakh limit has been increased to rupees 7 lakh. That means in case you are a salary employee and you have an income up to rupees 7 lakh, you don't have to pay anything. It is totally exempt. And one more benefit that they have added to the new regime, earlier there was no standard deduction in case of new regime, but now they have introduced a standard deduction of 52,500 rupees. But this is given only to the employees who have a salary above 15,50,000. In case you have a salary below 15,50,000, then you are still not eligible for the standard deduction. So this is basically, this is whole about our tax structure.
Sure, ma'am. Thank you so much for elaborating on that. Also, along with this, ma'am, while we discuss about the different tax regimes and the other aspects of it, can you please help us understand this basic at the very fundamental aspect, that is, what are the different salary components?
Look, when we talk about salary, we all know this is basically a reward that is given by the employer to the employee for working. So salary has basically two components. One is fixed component, another is variable component. So when we talk about fixed component, that is basic pay, HRA, DA, which remains fixed. And then when we talk about the variable component varies on the performance of company, it varies on the performance of employees. For example, we have bonus, we have commission, as and when you earn more, you bring more revenue to the company, they give you more commission or more bonus. So that is a variable component. And when we talk all this in detail, so taking everything one by one about the components of the salary, first to begin with, we have a basic salary. Basic salary is, in fact, it should be 50% of CTC. Then another component is allowances. Allowances are basically like house rent allowance, dearness allowance. They are the monetary benefits given by the employer to the employee. Then we have perquisites, which are basically attached to the designation of the employee. That what is your designation? In case you are a manager, they will give you I-10. Then you become a general manager, they will give you Honda City. And then in case you become CFO, they will give you BMW. So it depends upon the designation. So similarly, these are the basic components. And apart from these, we have also bonus, commission, leave travel concessions. Then we have social security benefits, as we all know, ESI, PF is also there. That is also part of salary. Then we have a gratuity in case you have worked for 5 years or more. Then gratuity is exempt. There we have a limit of rupees 20 lakh for the gratuity. Then we have retrenchment compensation in case your employers struck you out, then they give you retrenchment compensation. Similarly, there are a lot more other components with different names. But combinedly, all these are parts of salary and are taxable under head salary.
All right. So, yes, ma'am, I think it is now a bit clear to all of us. Also, can you please throw some light on how to calculate the income tax for salaried employees?
Yes, when we talk about salaried employee doesn't mean only salary that is taxable. So basically, income tax, we have 5 different heads of income. First, as we all are aware of, that is salary, which we are getting from the employer. Whenever there is employer-employee relationship, so anything that is paid by the employer to the employee is taxable under head salary. Then second component is income from house property. So in case you have a house property and you have rented out that property, so any rent that you are getting from that property, that is taxable under head income from house property. There we have a statutory deduction of 30% of what all rent you receive, and the remaining component is taxable. Then we have third is profit and gains from business and profession. So in case even if you are employee, but you are doing some consultancy part, let's say, along with salary. So that consultancy part will be taxable under head profit and gains from business and profession, because that is part of your profession. Then we have capital gains. So capital gains is like we all salary employee, we invest in some shares, mutual funds, PMS. So any profit that I'm gaining from selling of my shares or debentures, that is taxable under head capital gains. There we have 2 different heads, that is short-term capital gain and long-term capital gains. So whenever you sell any shares, listed shares that you have been holding till 1 year, then in that case, you have short-term capital gain. But once the period of holding increases more than 1 year, then you have long-term capital gains. And similarly, they have a standard tax rate, that is short-term is taxable at the rate of 15% and long-term it is taxable at the rate of 10%. Once we have exemption of rupees 1 lakh on long-term capital gain. Then last but not least, we have income from other sources. So income from other sources contains all the income that is not taxable under above 4 heads, that is salary, PGBP, house property and capital gains. So income from other sources, basically income has an income like if you are investing in FDs or any bonds or debentures, you have any interest, you earn any interest, that is taxable under head income from other sources. Similarly, if you are investing in shares and you are earning some dividend part, that is also taxable under head income from other sources. So you can say any income that is not taxable under above 4 head will be taxable under this head. So sum total of all these 5 heads is called gross total income. And then from this gross total income, we have a deduction under section 80. Then we have net income, and income tax is applicable on that net income part. So we have deductions, and then we have net income, and then we pay tax along with surcharge and education cess.
All right. So thanks for clarifying that, ma'am. Also, ma'am, now since we're already talking about different aspects of it, like how these income tax will be calculated on the salary, what are the different deductions under income tax for the same salaried employees again?
Okay. So when we talk about deductions, there are deductions under section 80. There are some deduction under section 24, that is interest. And then we have deduction under section 10 also regarding some allowances. So I want to, before going ahead, I want to make one thing clear. As we have got new budget, yesterday only they have declared new budget. So under new budget, old regime is same as it was earlier. There has been no change in old regime, but new regime has been changed. As I told you, the tax slab has been increased from earlier it was 5 lakh and now it has been increased to 7 lakh. So 7 lakh you don't have to pay any taxes. So what I wanted to make understand under this is like your deductions, which were earlier under old regime, same deductions have been continued. There has been no change in deductions under section 80 in this new budget. So talking about the old provisions about section 80, to begin with, we all know section 80C, that is most important section, and it contains most of the investments where the salary person can invest and get deductions. So obviously I'll be explaining all these deductions later on also, but I just want to give one brief about these deductions. So 80C deduction, we have exemption up to rupees 1,50,000 in case you are investing in LIC, in case you are investing in MPF, or if you are repaying any loan taken for purchase of house property, or you are investing in mutual funds for the first time. So all these things, they are covered. Your provident fund, your PPF, everything is covered under section 80C. As I'm telling, it is a wide definition. It has wide range of investments over which you can claim deduction. Similarly, we have one more section here, that is 80CCD 1B. So here, any contribution that has been made by the employee, either he himself is making as an employee or even a self-employed person can also make. So in case you are making any contribution under this section, then you get additional deduction of rupees 50,000 apart from rupees 1,50,000 that have earlier discussed under section 180C. Similarly, apart from this, we have 80D also. 80D contains the deduction in respect of medical insurance premium. So in case you have paid any medical insurance premium for yourself or your family members, then you get this deduction. Here the limit is 25,000 or 50,000. I'm going to explain this again. Then we have 80DD. 80DD is in respect of medical treatment of any dependent disabled relative. So in case you have spent any amount for the medical treatment of any dependent disabled relative, or you have deposited any amount for his benefit under LIC or UTI, under any other scheme, so you are going to get this deduction. Here the capping is 75,000 and 1,25,000 depending upon the severability, that is disability level. So in case there is a severe disability is above 80%, then you get a deduction of 1,25,000. Then we have 80DDB here. 80DDB is for specified diseases. So any life-threatening disease, as such, these diseases are basically mentioned in this section. But in case if any person is spending any amount for the treatment of any specified disease, then you get this deduction. And then we have 80E. This is regarding the interest taken for higher education. So if you have taken any loan for higher education and you are paying any interest on that loan, then you will get the deduction under section 80E. Then we have 80EE. This is in respect of loan taken for purchase of affordable house. So if you have taken any loan for purchase of affordable house means whose stamp duty is less than rupees 45 lakhs. So if you have taken any loan for purchase of that house, then you will get a deduction under this section, provided you should have only one house at the time of taking this loan. In case you have two houses, then you are not going to get this deduction. So here the capping is of rupees 1,50,000. Similarly, this deduction was carried forward under head section 80EEA. So only the time period has been changed, but under section EEA, same deduction is there. So at present, if you are going to buy any new affordable house and you are going to take any loan, then you will be covered under section 80EEA. Then coming ahead to section 80EEB. 80EEB is regarding electronic vehicle. So as the government is promoting clean India, green India, so government has given this deduction. So in case you have taken any loan for purchase of electronic vehicle, then you are going to get this deduction on the interest paid on such loan. Here the capping is of rupees 1,50,000. I'm just giving a brief of all these deductions. Reason being, I'm going to give you a detail on these deductions later on. Then we have 80GG. 80GG is with regard to the rent paid. So in case you are an individual, you are not getting house rent allowance, because normally salaried employee are getting house rent allowance. If in case any salary employee is not getting house rent allowance, but he is staying in a house on rent, he does not own any house at the place where he is residing, he is taking house on any rent, then he is going to get this deduction under section 80GG. Again, condition is that you should not own any house in your name, in the name of your parents, or in the name of HUF, or in the name of children at the place where you are residing. So then you are going to get this deduction. Here the cap is of rupees 60,000, that is 5,000 per month. Similarly, we also have deduction under section 80TTA. 80TTA is with regard to the deposits. So in case you are a normal assessee, that is you are normal, not a senior citizen, and you are earning any interest income means interest from saving bank or post office. Only these two are covered here in this section. So in case if you are getting any interest income from saving bank or post office, then here you are going to get a deduction of rupees 10,000. This is a maximum limit. If you are earning interest of rupees 8,000, then you are going to get a deduction of rupees 8,000 only. But in case you are earning interest of rupees, let's say 16,000. So in that case, maximum cap is of rupees 10,000. You will not get a deduction of rupees 16,000. You will get a deduction of 10,000 only. Next, we have 80TTB. 80TTB is for senior citizens. So in case you are a senior citizen and you are earning interest from any bank or any post office, then you are going to get a deduction of 50,000. That is the maximum limit. Here, there is a one difference when we talk about 80TTA, like the people like us who are working and who are getting any interest income, they are covered under 80TTA. But in case if someone is senior citizen, then he will be covered under 80TTB. This is one difference. Another difference is in 80TTA, if you are getting interest from your FDs, you are not covered. But in case of 80TTB, if you are getting interest from FDs, then you are supposed to get a deduction under section 80TTB. Provided again for 80TTB, you need to be a senior citizen. Then we have section 24B also. In case you have taken any loan for purchase of house and you are paying interest on that. So if that property is self-occupied, that is you are living, then in that case, you can get a deduction of rupees 2 lakh in this section. But in case if that property is let out, then there is no limit for the deduction. You can claim whatever interest you are paying. So it can be above 2 lakhs. Similarly, we have 80U also for salary employee. If he or she is a physically handicapped person, then we get this deduction, which ranges between 75,000, and in case he or she is a severe disabled, then the deduction amount is 1,50,000. So these are all, I have just given you a brief about the deductions that a salary employee can get while performing his duties or while getting his salary and paying taxes.
Thank you so much for helping us understand all of this so clearly, ma'am. Now, somewhere while you're answering the previous question, you brought up this thing of stamp duty. All right. So now I'm a little curious to know about that. So my question now is, while we talk about the salary tax exemptions under different sections, please help us understand the tax benefit of section 80C, stamp duty and the registration charges for it.
Look, as I have told you, 80C is very wide section. It is very wide section. It contains a lot of investments where you can invest and you will get a deduction. The only issue, the only problem is the limit is only 1,50,000. So you can say there are A to Z investments, options where you can invest, but the issue is the amount, the capping amount is the main constraint. That is only rupees 1,50,000. So in case you have purchased any new house property and you have paid any stamp duty or registration fees on that property, so in that case, you will get a deduction of rupees 1,50,000. Again, this is the maximum limit under section 80C. So collectively, from all the investment that you have made under section 80C, you are going to get maximum rupees 1,50,000 only. So additional 50,000, as I have discussed earlier, is regarding 80CCD 1B. That's it. So in case, again, I repeat, in case you have bought any new house property and you have paid any stamp duty and registration fees for that new house property, then you can claim the deduction on paying that stamp duty and registration fees. And this deduction amount capping is again 1,50,000. Here you have one catch. in case you buy that property in joint name, that is Mr. A is also there and Mrs. A is also there, let's say, then in that case, if they both are joint owner of that property, then individually they are going to get rupees 1,50,000. That is, Mr. A can also claim 1,50,000 and Mrs. A can also claim 1,50,000. But you cannot transfer this property within the period of 5 years from date of purchase. So in case you sell this property within 5 years, then any deduction, that is whatever deduction you have claimed earlier with regard to the stamp duty and registration fees, you will have to pay tax. That is, that deduction will form part of your income and you have to pay tax in the year in which you have sold that property. So this is, I can say, this is something good for all those who are bearing this stamp duty, because obviously it costs you a lot. Stamp duty and registration fees, whenever you buy any property, it costs you a lot. So this is a good exemption for all those people.
Sure, ma'am. Thanks for sharing these details. Also, ma'am, we all understand in the country that there are many initiatives are taken by Government of India for the benefit of citizens, right? So one among them is this Sukanya Samriddhi Yojana, the campaign. So can you please help us understand what is Sukanya Samriddhi Yojana and what is the eligibility criteria for it, and whether it has any tax benefits?
Well, this is a very good drive that was taken by BJP government in 2015. This was under the slogan of Beti Bachao Beti Padhao Yojana. So they started this campaign with this slogan Beti Bachao Beti Padhao Yojana, and they started this Sukanya Yojana. Under this, the best part is you can start this scheme with only rupees 250 per annum. That is, if your girl child, you have a girl child who is less than the age of 10 years, you can get her registered under this, and then you can start the scheme with only 250 rupees per year. That is not per month, but per year. And maximum you can invest up to rupees 1,50,000. But when I talk about tax incentive, for tax incentive, again, the capping under section 80C is 150. This is another part of 80C only. And capping is again 150. So if you are not you are not very inclined towards taking deduction, but you are inclined towards investing somewhere and getting a good return, then this is something good. You can invest here. So if you have a girl child having age of less than 10 years, then you can go for this scheme. Minimum investment 2,50,000, maximum investment that is 1,50,000 per annum. Here you get an interest around 7 to 8% somewhere. You get interest on this, and once your girl child attains the age of 21 years, then it gets mature. Even you can get it mature earlier also, but I think 50% of it only you can get the amount. But after the age of 18 years, the girl has attained the age of 18 years, you can get this mature. You can get this mature for her marriage or for her higher education. But the best part here is whatever interest you are getting or whatever amount you get at the time of maturity, this is totally exempt. So any parent or legal guardian, they can go for this scheme. Again, if you want to go for this scheme just for the tax benefit, then I won't suggest. But if you want to take benefit of the scheme, this is the best scheme that the government has introduced something. So at maturity, you can get the amount, and it will be totally exempt. Entire interest that you have received will be totally exempt. So basically, you can say this is a win-win situation for the parents and the girl child. So it offers you incentive along with the brighter future of the child.
Surely, ma'am, surely. Yeah, I think it's one of those best campaigns I can say. So thank you so much for sharing these details. Ma'am, I'll just go back to the section 80 EEB that you were discussing some time back.
Yes.
So can you please tell us more about the features of this section 80 EEB?
Well, this is very good scheme, one of the good scheme I can say, but unfortunately in this budget, they have not renewed this scheme because this scheme is going to end by 31st March 23. So after 31st March 23, it won't be any longer, but this was something very good. The the government has taken the drive of Clean India, Green India. So under this drive, they have started this scheme. So in case you are an individual and you are planning to buy any electronic vehicle and you are taking loan to buy that electronic vehicle, so you can claim tax benefit on the interest paid on such loan for purchase of electronic vehicle. And the capping here was rupees 1,50,000. That is still 1,50,000 you can claim the interest. So in case you are paying, you have taken any loan for the purchase of electronic vehicle and you are paying a, let's say, interest of rupees 80,000, then that entire 80,000 rupees you can get as a deduction. But if in case you are paying interest of rupees 1,60,000, then the limit is only of rupees 1,50,000. You won't get 1,60,000 as deduction. You will get rupees 1,50,000 as deduction only. Here, you can use this electronic vehicle for business purpose, also for personal purpose. This was one advantage. Another advantage was there, some of the state governments, they were also giving exemption under road tax also. But there is one disadvantage under this section. The only disadvantage is that this section is applicable only for the purchase of one electronic vehicle. So in case you have one electronic vehicle and you are planning to take another electronic vehicle and you take loan, then you are not going to get deduction of this section in case you buy that vehicle in your name. So whatever interest you are paying, you will not get any tax benefit out of that interest. It is just interest you are paying. Second better part about the deduction part that you won't be getting in that case. That is the only lacuna in this section. Otherwise, this is a very good section.
All right. Thank you so much, ma'am. And ma'am, I'm a little more curious about section 80E. So can you please help us understand the eligibility of it, the tax benefits that we can claim under this section 80E?
Yes. When we talk about section 80E, so if you are taking any loan for the higher education for yourself, your spouse, your children, or for any person for whom you are a legal guardian. So if you are taking any loan for the higher education, when we say higher education means any education above class 12. So they don't count it as higher education above class 12. They count it as higher education whatsoever you are studying or whatsoever education wise you are doing. So in case you have taken any loan for the higher education and you are paying any interest on that loan, here you have to take that loan from the banks only, from the financial institutions only, or from the charitable organizations only, and then you are paying any interest, then you will going to get this deduction. In case you have taken any loan from your friend or from your relative and you are paying interest on it, then you cannot claim deduction under section 80E. So again, to repeat, in case you have taken any loan for the higher education for yourself, for your spouse, for your children, or for a person for whom you are a legal guardian, for higher education from any bank or financial institution, and you are paying any interest on that loan, then you can claim that interest as a deduction under section 80E. This deduction is available for 8 years, starting from the year when you have taken that loan, and starting from the year when you have started the repayment of that loan. So this deduction will be available for that year. Initially for the first year when you have started the repayment, and then for the remaining 7 years. So here the good point is there is no limit, that is there is no capping. So whatever interest you are paying, you can get the tax benefit over the entire interest. I also want to discuss one thing more. Sorry, but I also want to discuss one thing more. Under 80C, we have one thing. Like we have one provision regarding the tuition fees. So whenever you pay tuition fees for your kids, you get a deduction under section 80C. That tuition fees is entirely different from this thing. This is education loan. So this is interest when you pay on education loan. That is tuition fees that you pay on your kids, education. So there are two different items. So in case you are paying tuition fees also, and you are also simultaneously paying any interest on the loan, simultaneously you can claim deduction under 80E as well as 80C.
All right. Yeah. Thanks for elaborating, ma'am. Now, after this, I would like to move towards the Income Tax Act. As we discussed various sections and the how it is going to be benefited for the salaried employees. Now, my question is, what is the Income Tax Act's Section 10 and what are the exemptions that fall under it?
Look, when we talk about Section 10, that is again a wide section and it covers a lot more provisions. To begin with, it has various categories. First, for salary class employee, I'm talking about, it has some provisions that are fully exempt. That is Section 10 allowances. If you are going to give to your employee, some of the allowances, they are fully exempt. Some of the allowances, second category, that are fully taxable. And third category, some of the allowances that are partly taxable, partly exempt. So to begin with, let's discuss about fully exempt. So some of the allowances which are fully exempt are the allowances that are given to the High Court judges, the allowances that are given to the UNO employees. Similarly, there are some of the allowances that are given by Government of India to its employees who are working outside India. So all these allowances are fully exempt. That is the first category. Then we come to the second category, that is fully taxable allowance. So when we talk about fully taxable allowances, DA, DARAS allowance, CC, compensatory allowance, cash allowance, these are some of the allowances, they are fully taxable. Then we have a third category of allowances that are partly taxable, partly exempt. This third category is again further divided into two categories. First category is they are exempt to the extent of actual amount spent by the employee. That is whatever you have received or spent, whichever is less. So under this category, we have like traveling allowance, then we have house rent allowance, then we have conveyance allowance, we have academic allowance, we have uniform allowance under this. So for example, if you are getting uniform allowance of rupees 10,000 for your uniform purpose, and you have spent only rupees 8,000 out of that for your uniform. So in that case, you are going to get a deduction of rupees 10 or 8,000, whichever is less, that is 8,000. So 2,000 remaining balance will be taxable. Again, I repeat, to the extent of received or spent for the official purpose, whichever is less is exempt. So in this case, 8,000 is less, it is exempt. So this is the first category. Here, when I'm talking, if you, in case your employer is giving you a Sodexo coupon, so that is exempt up to rupees 2,200 per month, irrespective of what all amount of coupon he is giving it to you. Then we have the second category here, that is allowances which are exempt to the extent of received or a specified limit. This is again the limit fixed by the central government. So any amount that is received or any amount that is limit fixed by the central government, whichever is less is exempt. So they have a list of this category, these allowances. Some of them I can discuss, like hill area allowance. So in case you have been posted to some hilly area, so depending upon the altitude, you will get the allowance, and the maximum amount that is exempt, the limit fixed by the central government is here is 800 to 7,000 depending upon the altitude. Similarly, we have border allowance here, tribal area allowance here, and some of the allowances which have been working from last I think 2 decades, like children education allowance. Children education allowance is here again, the limit fixed by government is rupees 100 per month. It is still the same from last 2 decades, and that is maximum for 2 children. And one more, we have hostel expenditure allowance. Here the limit fixed by the government is rupees 300 per month, again maximum for the 2 children. Then we also have transport allowance. So there are so many other allowances. And when we have underground allowance here. Underground allowance means you are a don and you have gone underground. No, it's not like that. Underground allowance means you are working in some mines and your employer is giving you some allowance. So in case you're working in mines and your employer has given you allowance, so in that case, the limit is 800 per month. So 800 per month or the allowance given by employer, whichever is less is exempt in that case. So this is basically all about Section 10.
All right. So, ma'am, I must say, I think our discussion is only getting interesting now. Yeah, I think there are so many things, like if we sit and talk about each and every section, I think just 1 hour is never going to do any justice to that.
Totally agree. Look, salary is like a vast ocean. You can say it like a Pacific Ocean. So you need entire, I think you need 1 or 2 days to discuss the entire salary in detail.
Sure, ma'am. Yeah. Also, ma'am, we were talking about one of these very useful schemes, Sukanya Samriddhi Yojana, right? So I have also heard of this another scheme, which is ATCCG Rajiv Gandhi Equity Savings Scheme, right? So can you tell us more about this? Like basically, what is this scheme, and is there any eligibility criteria for this? How does this work?
Look, the basically the reason for bringing this scheme, first of all, the reason for bringing this scheme was government wanted people to invest in securities, invest in market. So that was the basic reason for bringing up this scheme. So this is available for the first time investors only. So any first time investor, any salary employee who has started invested in mutual fund for the first time, he can claim this deduction. The condition here is you need to have a demat account. So in case you are buying any mutual funds or equity shares online or through physically hard papers, you are buying them. So you are eligible to get this deduction, provided you should be a first time investor. Here the capping is of rupees 50,000. So if you have invested, so whatever amount you have invested, you can get a deduction of 50% of that amount, or rupees 50,000, whichever is less. So basically, this is the main criteria. So you need to have a demat account. Only thing is, and this is only available to the first timers, not later on. So it is just government wanted people to invest more and more in equity shares and mutual fund. That is why they bring this scheme.
All right, all right. Thank you so much, ma'am. I think this helps a lot. I just have one last question from my end. But before that, dear participants, if you have any questions, please start putting it across in the Q&A option of the Zoom control panel. I can already see many questions are lined up, so I will not take further time of yours. Just one last question, ma'am, and this is all about section 80D. So what is this 80D and how is it beneficial to a salaried person?
Look, when we talk about salary person, salary employee, then I tell you 80C and 80D. These are the most common deductions that each and every, I can say, salary employee claims. So when we talk about 80D, this has gained popularity, I think, post-COVID. Because normally earlier people were like, they were investing in it just because they were getting some tax benefit. But nowadays, people are investing in this just because they are very concerned about themselves. They are concerned about their families, because they know what is actually like cost of spending for the medical expenses, you can say. So this is something like that. So in case if you are individual and you have bought any health insurance premium for your family members, that is yourself, your spouse, your kids, including your parents, so then you are going to get this deduction. Deduction capping is rupees 25,000, provided you are not senior citizen. So in case you are senior citizen, then you are going to have a deduction of rupees 50,000. So let's take it like this way. In case any individual has taken health insurance premium for himself, and he has taken a health insurance premium for his parents also, and he along with his parents are less than the age of 60 years, then in total he is going to get a deduction of rupees 50,000 only. But in case he himself is not a senior citizen, then he is going to get a deduction of 25,000. And in case his parents are senior citizen, then he will get an additional 50,000 for the senior citizen parents. So in total he is going to get a deduction of rupees 75,000. And in case if he is also a senior citizen and his parents are also senior citizen, then in total he is going to get a deduction of rupees 1 lakh. So here is one more advantage under this section. In case you are not able to take this health insurance policy due to any reasons, maybe because that person, he cannot get this policy or anything like that. So, but you are investing, you are spending some expenses, you are doing any expense for the medical expenses for that person. So then also you can claim this deduction. Like sometimes it happens like you are senior citizen or you are suffering from any medical disease. So insurance company, they are reluctant for this health insurance premium. So in that case, you could not get this health insurance premium, but you are incurring any expense for them, then also you can get a deduction of rupees 50,000. So one thing is that you are taking this insurance premium, health insurance premium. Another thing is you are not taking this insurance premium due to say any A to Z reasons, but you have done any expense for the medical expense for that person, then you can claim this deduction. Again, capping is 50,000 for that senior citizens.
All right. Thanks for answering that, ma'am. I hope it is pretty clear now. Also, thank you, ma'am, for such an insightful and knowledgeable session. I'm sure that our audience have gathered a lot more information and details on this buzzing topic. Now let's move towards the audience questions. So like I said, already audience questions are queued up here. So the first question is, what deductions are eligible under the new scheme?
Look, as I have told you earlier also, under new scheme, what they have done is they haven't touched the old regime. It is totally untouched. So what all deductions, what all tax slab was earlier, same you are getting in future years also. What they have done, they have just changed the new tax regime. They have changed the tax slab, that is now, earlier it was 2,50,000, they have changed the tax slab to 3 lakh, one thing. Then they have changed the exemption limit. Earlier till 5 lakh, you were not supposed to pay any tax. That is, in case your income increases to 5 lakh 1 rupees, you were supposed to pay 12,500 as taxes. But now what they have done, they have increased that limit to 7 lakh rupees. So now in case you have income above 7 lakh, let's say 7 lakh 1 rupees, then you are going to pay taxes. And in new regime, again, I'm repeating, you are not going to get any deduction under section 80. What they have done, they have brought in the additional benefit of standard deduction, which was not earlier there. So apart from changing the slab rate, apart from changing the exemption limit, they have introduced this standard deduction. But this has been introduced only and only for the employees who have salary above 15,50,000. That's.
All right, ma'am. So I hope that answers the question. Next one, we have one interesting question, ma'am. So that is, it's all about the old regime and new regime. So the question is, if an employee has selected the new regime for first month without knowing the tax deduction, and from second month he or she had declared with old regime, what will be the changes?
Look, this is something very good question, but for the salary employee, they always had this benefit. In case you have opted for the new regime and now you want to switch over to the old regime, you can do that. But I want to add one thing here. By default, from like what they have declared yesterday in this budget, from April onwards, by default, you will be always opting new regime, not old regime. So now you have to do, you have to go reverse. Like earlier, by default, it was always old regime. And if in case you want to opt for the new regime, you have to opt. But now, after 1st April 23, by default, you will be signing into new regime only. And in case you want to opt for old regime, then you have to go for the old regime in that case.
All right. So thanks for clarifying that, ma'am. I hope that answers the question. Next one of our attendee would like to know about the travel allowance. So the question is, if we have travel allowance in our salary package, then can we claim exemption of that allowance if we show the proof of petrol or cab or etc.? What is the provision there?
Look, in case you are claiming travel allowance, first thing is that you need to maintain a logbook there. So you need to show the proof. There will be a reimbursement that you have gone for the office purpose for here and there, wheresoever you are going. So in case you prove that to bill, then and you are keeping a logbook, then you can pay this travel allowance. This is basically a reimbursement. Now you can say that you have spent any money for the official purpose and they are reimbursing to the extent you have actually spent for that. That is exempt.
Sure. Thanks for answering that one. Next one is about the reimbursements. So one of our attendee would like to know that many companies are reimbursing telephone or internet expenses, and tax exemption is being given on submission of bills. Since this is carved out of the CTC, how can exemption be given? And if it is an official expense, then it cannot be part of CTC.
Look, it depends upon the company policy. First of all, I cannot comment on that. But when we talk about this telephone allowance, in case you are spending this amount for the official purpose, so you are delegating official authorities, official duties. I'm sorry. Yes, then you can claim this deduction. You can claim you are getting this much telephone allowance, and the entire amount has been spent for the official purpose. It is totally exempt. But again, in the old regime, in new regime, you are not going to get any allowance.
Sure, ma'am. Also, ma'am, I think you have already touched upon this, but if there's anything that you would like to add here, the question is about the tax exemption for senior citizens. So please advise.
Look, for senior citizens, as I have earlier also told you, that there is a different slab, tax slab for the senior citizens. Here I want to add one thing, since you have asked me about senior citizens. So under the new budget, what they have done, they have introduced, earlier there was a limit of 15 lakh for the FD for senior citizens. They were getting some higher rate of interest on that. Now they have increased that limit from 15 lakh to 30 lakh. That is, you can get that FD done till 30 lakh. You will get the higher rate of interest as compared to the normal individual. One thing this they have done. Another thing what they have done is, for MIS scheme, post office, in case you have opted for a monthly income scheme and a post office, then earlier the limit was of rupees 4 lakh. Now they have increased that limit to 9 lakhs. So till 9 lakhs you can invest in MIS.
All right. So thanks for answering that one. Next one is about the exemption on mutual fund. So the question is, mutual fund purchase is only exempted if we purchase it for the first time. Can we get it exempted any number of times we invest in it?
No, I'm sorry for that. That is only for first timers.
All right. So yeah, thanks for clarifying that, ma'am. I hope that answers the question. Next one is again a very interesting one. It's about home loans. So the question is, what is the eligibility for additional home loan benefits?
Additional home loan benefits, in the sense, like, I'm not clear about this. As I have already told you, under section 24B, you are going to get interest. Look, there are two different sections where you can get the deduction under home loan. First is 80C. So any repayment of loan is covered under section 80C. So that is repayment of principal amount, what I am talking about. So if you pay any principal amount, repay any principal amount, you can claim a deduction under section 80C. That is one thing. Second thing is under section 24B. That is, if you are paying any interest, you have taken a loan and you are paying any interest for the purchase of house property, then you can claim a deduction here. Again, as I have told you earlier also, here the limit is of rupees 2 lakh in case that is self-occupied. But in case it is let out, then there is no limit on the amount. And I have also discussed about the affordable home. So in case you are fulfilling that criteria of affordable home, then any interest paid by you can also be claimed as deduction. That is the additional deduction. 80EEA is the additional deduction to 80C, but only for affordable home. And that too, at the time of taking loan, you are just buying that one, you are getting one affordable home. In case you have two, then you are not going to get.
All right. In somewhat similar lines, ma'am, our next question is, can employees claim HRA and house loan benefits if both properties are in the same city?
Look, for HRA, as such, there is no criteria that you should not own any house in the same city. The criteria is that you are living on rent. When we claim deduction under 80GG, there we have a criteria that you should not own any home at a place where you are taking the property on rent. Either you or your parent or your child or to the HUF you belong. You should not have any property in that area, in that state, in fact. So under ATC assets, there is no criteria.
All right, so I hope that answers the question. Next one is again about housing loan. So if we have a housing loan and the apartment is in the name of my husband and mine, but the EMI is going from the husband's account. So am I eligible to submit this document for tax deduction?
Look, the best part of ATC and the interest on housing loan is if they are co-owners, then each of the co-owner can get separate deduction. So even you can get a deduction of 1,50,000, your husband can also get deduction of rupees 1,50,000. So ATC limit is separate for separate for both individuals. So that is the best part under ATC.
Okay, thanks for answering that, ma'am. Next one is which is the tax saving investment plan with a minimum capping period, and let's say it is less than 5 years.
Look, I can tell you regarding the tax part, but I cannot tell you about the investment, which investment you should go for. There are a lot more investment you need to hunt in the market for that, and then you will come to know.
Right.
So yeah. I think I am not the right person to approach for this, for the investment purpose. I can guide you for tax purpose.
Absolutely. Thank you, ma'am. Next one is, can we withdraw from Sukanya Yojana before maturity?
Look, you can withdraw for the Sukanya Yojana before maturity, but they are subject to conditions. And one thing to add here, you will only get 50% of the amount that you have invested in it. You won't get entire amount in that case. But that you need to prove why, because there are conditions mentioned in that section. God forbid that girl child, she has died, or anything mishappening has happened. Parents are unable to pay. So anything like that. In that case, you can get it matured.
All right.
Prematurity is there, provided it is subject to conditions.
Sure, ma'am. Thanks for sharing that. Next one is about the something other than ATC. So as a salaried employee, other than ATC, which section is the best and from which we can save the tax amount?
Look, I have discussed all the sections. So whatever section like you think you can better suit in the sense like you are going to get an electronic vehicle, you want to buy an electronic vehicle, you can go for ATEB. You are going for affordable housing, you can go for ATEA. This is entirely your option, which section you want to opt for, because each and every section gives you deduction under some specific conditions, provided you fulfill those conditions. So in case you are able to fulfill those conditions, then you can opt any of the section.
Absolutely, ma'am. Yeah. All right. So then next one, ma'am, it's about the ATDDB, right, where we talked about the medical and all of the stuff. So in ATDDB, is government doctor authorization mandatory along with Form 1, or only the respective doctors treating authorization is sufficient?
Look, when we talk about ATDDB, then you need to submit two things are there. Yes, government doctor certificate is required, one thing, and then you need to also submit a document 10 IV in that. Both of the conditions should be fulfilled in that case to claim that deduction.
Okay. So next one is about the education loan, ma'am. So the question is, can I get an exemption for an education loan taken for a certification program which is of duration 6 months?
Look, the time limit is not the criteria. First thing, whether it is for 6 months or for 2 years or for 3 years, provided any education loan that fulfills this, that it has been taken for the higher education. So higher education, as I have told you, that you should count higher education anything that is done after class 12th. So in case you have taken loan for that, then yes, you can claim deduction.
All right, ma'am. So thanks for clarifying that. Next one is about section ATG, where we talk about the donation and other related things. So is donation ATG considered part of proof of submission by the employer in case the employee has provided all the documentations with the registered trust for donation, or should we advise the employee to file the ITR returns?
Look, normally what happens is, because ATG is very litigative part, I tell you. So normally what employer does is they ask employee to claim this deduction themselves, rather than employer ask the employee to submit me the documents, I will claim this deduction for you. So what practically scenario I am telling you, normally employers avoid this, because this is very litigative, from where you have got that receipts, and who is this like person to whom, who is this charitable person, authority to whom you have given this loan. So normally that is why employers, they are reluctant to give this deduction. What they tell their employees is, kindly get it yourself in your return.
All right. Yeah. So that helps a lot, ma'am. So next question is, someone has requested us to focus a little bit on LTA, leave travel allowance.
Allowance, okay, yes, leave travel allowance is one thing I want to tell here. Okay, you have asked me for the leave travel allowance till rupees 3 lakh. Earlier it was exempt. For the happy news is, but the happy news is from, like yesterday, what we have got from the budget. From 1st April onwards, leave travel for leave travel allowance, the limit is 25 lakhs. So it was, this limit was, this 3 lakh limit was from 2002. It has not been changed since then. So this time they have given a huge discount on this, or huge rebate on this. So it has been extended to 25 lakhs LTM.
All right, sure, ma'am. The next question is about NPS investment, ma'am. I think this is another interesting aspect. So could you please explain NPS investment?
Look, as I have told you, in case you have invested in NPS investment, so NPS investment can be done by you, it can be done by your employer, any self-employed also person can also do this NPS investment. So in case of government employees, it is 14% of the salary. In case of any other person apart from government employee, it is 12%. So whatever you have invested to this limit, 12%, 14%, you are going to get a deduction under section 80 under this 80 DD2.
All right.
Under this.
Sure, ma'am. Thank you. Also, dear attendees, we are trying our best to take up your questions, but due to time constraint, if any of your questions go unanswered, please don't be disappointed. You can always write back to us, and also you can get in touch with Ma'am Ruchika as well. We will soon be sharing the details of all of this. But for now, we are just trying our best. That's all I can say. Ma'am, I'll just take a couple of more questions before we end the session. All right. So the next question is, one of our attendees would like to know, can you please brief about superannuation fund? What is the exemption limit if contribution made by the employer? And is it mandatory for policy to be in name of the employer and not employee?
Look, superannuation fund, like if we talk about superannuation fund, yes. As you have told me, it is, can you repeat that question? I'm sorry, but.
Yeah, sure, ma'am. So first part is, can you please brief about superannuation fund? Next is, what is the exemption limit, which is made by the employer? And is it mandatory for policy to be in the name of employer and not the employee?
Look, normally employer only takes this policy, not the employee, and they provide you with this policy. So you can have a word with your employer, but normally this happens practically what I'm talking about, only employer takes this policy for the employee. So in case employer has taken this policy for the employee, you can get this benefit in case you are investing in this superannuation fund.
All right. So the next one is about health checkup benefit, ma'am. So the question is, can I claim health checkup benefit and medical insurance both under section 80D? My employer said that checkup expense can be claimed only if there is no medical insurance. Is that so?
Look, this depends upon the policy that the employer has taken, whether the medical checkup is also covered in that policy or not. So you need to check up with the employer whether this health checkup is also covered in this, because normally it is covered. So you need to check up with your employer which policy he has taken for you.
Sure, ma'am. So one last question I'll take up, ma'am. So the question is, under Section 80D, if corporate policy is granted to employee to cover dependent parents, can employee claim the exemption under Section 80D for the amount contributed from his salary?
Look, since the employee has contributed from his salary, that is, employer must have deducted that amount from the salary of the employee. So in this case, yes, employee can claim. Because ultimately, the employee is the person who is paying for this insurance. So in that case, he can claim. Exactly, yes.
Sure, ma'am. So I think with this, we are done with most of the questions. So once again, I'm just repeating it here, dear participants. If any of your questions are unanswered, please don't be disappointed. You can always write back to us on our community, that is greytHR. So this is basically the knowledge sharing platform. You can definitely get your answers and responses here, and the link for the community is already given. So please do try it out. And also, if you have any other questions, please feel free to write back to us on the given mail ID here. That is rakigautam@greytip.com. And I think now is the time to conclude this session. But before that, would like to thank everyone. Special thanks to Ms. Ruchika for the session. Once again, ma'am, you have certainly given us a lot of insights on salary tax exemption under different sections. Also, dear participants, thanks for attending the session and for making it more successful. Like I already mentioned, if you have any more questions, please feel free to write back to us on the mail ID here, and we will definitely get back to you. And with this, I think it's now time to say thank you and sign off this session. We will see you soon in the next session with yet another interesting topic. Till then, stay safe. Have a great time. Thank you.
Thank you, Rashima.